Hi. Have you ever thought about purchasing a condo? Well, if you have, this video is for you. There are some things that most people don't fully understand about condo ownership, and if you aren't sure about these things prior to making that purchase, it could cost you. Hi, I am Spencer Argueta, one of the brokers and owners here at Elevate Realty, and I am shooting from the balcony of my family's hotel because I didn't want to miss my schedule of jumping on to talk about St. Louis real estate with you today. So, what is a condo? At a basic level, a condo is a unit that you can purchase that you really own from the walls in. The condo association, which you become a member of, owns the exterior. So many homeowners choose to purchase a condo for the fact that it is easier maintenance. They don't have to worry about the exterior in most cases. However, side note, in some condo associations, while you might not be responsible for the roof or the siding, you still might be responsible for a deck if you have one. But they choose it because they don't have to worry about the exterior of the association all themselves. They don't typically have to do any of the landscaping, maintenance, snow removal. So it makes it a great option for those who are older or traveling and don't want to have to deal with those things. It really can solve a lot of issues for them. Secondly, it can be a more cost effective way for you to be able to get into home ownership in many markets. And because many condo associations offer amenities like maybe clubhouses, pools, and tennis courts and other benefits, people want to get into it for the lifestyle and the amenities that they offer. So, when you're considering purchasing a home, one of the first things that you have to really take a look at is what are the association fees. Here in the St. Louis market for condos ranging anywhere from 200 to 500,000, you will typically find your association fees monthly are ranging from about $300 to $500 every single month. Those association fees typically do cover water, trash, and sewer. So those are bills that you would be paying if you owned a traditional single family home. However, it is now rolled into that, but then a portion of that is paying other fees like the insurance for the community and other expenses that they might have. If major issues do come up in the association, maybe the condos all need new roofs. If there's not enough money sitting in their big bank account, then they will come to all the homeowners and issue what's called a special assessment, asking everyone to pay in. This is not optional. This is going to be something that's required, where you have to pay in to make sure that that big expenditure to take care of the condo association is done. So while it's a benefit to be part of a condo association where you don't have to necessarily worry about doing the exterior work, you are not free from the cost of that. With a condo association, when you become a part of that association and one of the members, you do typically have some voting rights. You can attend the meetings and talk about the things that are coming up and what the health of that association is. And I'd highly encourage you to do that because, unlike a single family home, where you do have issues come up, same thing happens on a condo. Same issues come up. On a single family home, you have full authority and ownership of that property to handle things how you see fit with the contractors that you want to use and at the budget that you would like. In a condo association, you are a vote in many, so you don't get as many options. Maybe it's an expense that could be pushed off for a while. Did we get multiple bids to find the most cost-effective way to do it? Etc. So other people's decisions 100% are affecting you and your livelihood. Again, if the funds are not available in that account for the association to replace the roof or the siding or whatever else needs to be done in the association, maybe there's a pool and the pool needs work, they're coming to you as a homeowner and all the other owners in that association and levying a special assessment that you will have to pay in order for those things to be done. If you can't pay that special assessment, they can and will place liens against your property. Secondly, when you're purchasing a condo, condos fall under special rules when it comes to Fannie Mae and Freddie Mac. Fannie Mae and Freddie Mac are the mortgage-backed secondary market. So what that means is when you purchase a property, you can use whatever lender you want. Those lenders follow the rules of Fannie Mae and Freddie Mac so that after you close on your home, that mortgage can be sold on the secondary market through Fannie Mae or Freddie Mac to other providers who will service your loan. With a condo, they do the same thing, but they have some stricter rules. Part of the loan program is that they are going to look at the health of the condo association. So here in St. Louis, we fill out something called a condo rider to your contract. This gives the seller notice that they need to provide us a condo questionnaire that answers specific questions about the home, get us the condo indentures, the financials, the master insurance policy, and other important documents for you to review, but more importantly, for your lender to also review. You should look at these documents and assess it. But depending on what's in these documents, the lender could potentially deny the loan, could potentially require you to put down more money, or, like I said, decline the loan completely. So you've gone through this process, the loan could be denied, and you can't purchase that home. So as a condo owner, if that happens, it could make it far more challenging for you to be able to sell properties. If Fannie Mae and Freddie Mac won't lend on your condo association, you are going to be stuck selling to cash buyers or buyers who are using a portfolio loan. Portfolio loan simply means that the lender who's issuing the loan plans to service it. They're not going to sell it, so they can make their own rules on what they deem eligible for lending purposes. So, checking out what's in those condo documents really matters. One of the things that they're looking at is, are there enough reserves in the bank account for large expenditures? Typically, they look at the annual income and want to make sure that there's at least 10% of that annual income being saved every single year. If not, that could affect your ability to get a loan on that property. Now, as someone who has helped many people buy condos and many people list them, one of the things that I make sure that I always notate on a condo listing is if the condo itself is rentable. It's the main question I get. Even if my client has every intention of moving into the unit themselves, they often ask if it's rentable. Most single family homes, you have the authority to rent it. Even if it's an association, most associations will allow you to rent the property. However, in condos, because it has to follow specific rules from Fannie Mae and Freddie Mac, they may have a limit, or should hopefully have a limit, on how many condos can be rented inside that association. Typically, about 10% of the units can be rented. If it crosses over that 10% line, it will affect people's ability to get a mortgage on the property. Again, decreasing the value of that building, because now you are looking at only cash buyers and buyers who are using a portfolio loan. Portfolio loans are fine, however, they can typically have higher costs, which then makes buyers less likely to want to use them. So when we decrease our buyer pool, we decrease the amount of money that your house can ultimately get, which puts downward pressure on the value. So that's why many associations rule out allowing any rentals in the first place, because as a homeowner, you don't want to be surrounded by a bunch of tenants. They just don't care for the property the same level as homeowners typically do. But two, if it creates pressure and makes it where homes can no longer be sold in your association, it now creates a downward pressure on your home value, which nobody wants that either. So if you are an investor who's looking to purchase a condo, you might really be excited about getting into a condo that can be rented because, hey, you don't have to worry about the exterior maintenance and all those things. Great. If you get into a condo right now that's rentable, just remember they continue to allow people to rent, and don't watch the rental amounts. You could find yourself that when you need to go sell that unit, your value in it has gone down, which does not make it a great investment. Second, if the condo can't keep up with the cost of inflation and rising costs that we are seeing constantly right now in our economy, they will have to continue to raise the assessments that are being charged on a monthly basis and levy special assessments. So if you are buying a condo and you are cash flowing at the beginning, a condo special assessment or a rise in the assessments that you factored into your lease could now take a condo that you purchased that was cash flowing for you and make it where you are now negative and paying to have a tenant in that association, which one then will make you obviously want to sell it. And if we've got too many rentals in there and we're limiting our buyer pool, or the condo is no longer warrantable because it doesn't have enough reserves, or any of those other things that can take place and often do take place on condos, that investment now is not a great one. So that's a lot of food for thought for you. If you're considering a condo, I'd love to talk you through all of that, and answer your specific questions to help you analyze whether maybe purchasing a condo for you is the right decision or maybe not, and what other options you might have. You can always reach out to me. Have a great day.